This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Now, let's go to the property markets around the country over the weekend. And across Australia, there were 1,606 auctions. Have a look here. The clearance rate, 57.3%. And that compares with last week's rate of 55%. So things actually got a bit better. But in Sydney, there were fewer auctions, 525, with a clearance rate here, 59.4%. So getting back closer to 60%. There was a further 1,411 properties sold privately in Melbourne, 600 auctions, a clearance rate 62.5%, pretty steady there, plus an extra 972 auctions sold privately in Brisbane, 92 auctions, a clearance rate 43.5%, plus 1,011 properties sold through private treaty. In Adelaide, 52 auctions, a clearance rate of 63.5%, 290 auctions as well sold privately. Finally, in the ACT, 53 auctions, a clearance rate of 50.9% and 82 properties sold privately. Now, let's bring in here Angus Moore from REA Group, economist there. Can I just say, Angus, that looks like people are prepared to buy properties right now. They're actually sitting there and saying, we don't care what happens with the Reserve Bank, even though the hurt from interest rate rises are later, we're not going to miss out in these property markets.
Yeah, I think that's right. You know, we saw through winter, clearance rates kind of fell right down to sort of around 50%. We saw buyer demand come right off. That's kind of tapered back a little bit over the spring. You know, we've seen volumes pick up, we've seen clearance rates come up, buyer demand's up a little bit. Homes are taking a little longer to sell, and that's been a trend we've seen since the start of the year, and particularly compared to last spring when things were selling very quickly. But you're right, there are still buyers in the market. We are still seeing transactions happen. Maybe not at the pace we were seeing last year, but it's certainly improved from winter.
Okay, so lots of economists that I speak with say the hurt comes later. And at the moment, there's not much hurt because, you know, you've got most people have got a job, 3.5% unemployment rate. And it's only until companies start to lay off those workers that you start to get the hurt, let's call it that. Then you've got people, 1 in 6 have got a second job. So again, they're managing to cope. While there's this demand for employment, people are going to manage with these mortgages, aren't they?
Yeah, certainly job loss is one of the key predictors of mortgage arrears and mortgage default. And in an environment with unemployment rates sitting at multi-decade lows, that's not a risk at the moment. Now, we have seen mortgage rates come up extremely briskly. The pace of interest rate rises has been the fastest we've seen since the early 1990s. That's certainly going to strain many people's budgets on top of inflation, which is adding to other budgetary pressures for households. But I think that will just strain, it won't break most people. And that's in some ways what the RBA is trying to do. They're trying to crimp down on household budgets, pull back spending, slow the economy a bit and get inflation under control.
But there's one other aspect of this, and that is the inflationary effect of building a home. Doesn't matter whether it's taps or whether it's your bathroom gear or whatever it might be, that adds to the price of houses to rise, not to fall. So either the builders stop building and or go broke, or people suddenly have to either raise expectations for what a house is worth, or indeed somebody's got to lose somewhere along the way.
Yeah, I think there's the cost of building a new home has kind of two impacts here. So one is directly on inflation. It is actually a really big part of the CPI basket. People don't buy new homes very often, but when they do, they're very expensive. So they account for a very large part of inflation. It's one of the largest components. Cost of building a new house, detached house, is up something like 20% in the past year. That's having a material impact on inflation. And
so there you go. So isn't that interesting? The cost of building a house is up 20%, but the price of houses is down 10%, 15%, something like that.
Yeah, exactly. That's the other channel, is this sort of trade-off between an existing dwelling and a new dwelling. We're seeing prices for existing dwellings fall, but the price to build a new home is rising. And so there's going to be a trade-off there that will ultimately resolve by building fewer new homes. We're starting to see that. Higher interest rates are starting to tamp down on building approvals and building commencements. We haven't seen that flow through to completions yet. We're still building and completing a lot of new homes for reasons we can discuss in terms of how big the pipeline of homes under.
I was going to ask you about that because there's a record pipeline of detached homes sitting there ready to go.
Yeah, it's enormous at the moment. So pre-pandemic, it was something like 60,000 homes in a typical quarter would be under construction. At the moment, it's more than 100,000. And 2/3 of that increase, so something like 26,000, is because it's taking longer to build a home. That means the pipeline's expanded and we're we've got a lot of homes under construction that will complete over the next
And one
12 months.
answer to that might be increasing the population as rapidly as you can, and that therefore would take up that demand for that pipeline of homes.
We're certainly going to see population growth return over this year and next year after it, with the lack of migration we saw through the pandemic, population growth actually turned negative in some places, particularly in Sydney and Melbourne with outflows into particularly southeast Queensland, but regional areas more broadly. That obviously had big impacts on housing prices. We didn't see that in the pandemic because interest rates mattered more, but we'll start to see that over the next couple of years.
Angus Moore from REA Group, always great to chat to you. Many thanks for your time.
Pleasure. Thanks for having me, Ross.